Hello, hello. This is Ryan, and welcome to the lesson on accounting and bookkeeping. I know everybody's favorite. Protect your castle and keep more of your money. Now, hopefully that does interest you. Now, you're going to see some jokes flirted in here and there to keep this light and keep this going, but this is a very important lesson. Again, we are professionals and we're making this our career. So we want to make sure that we set things up, again, to protect the castle and keep more of the money that you're making. So it's income tax time again, Americans. Time to gather up those receipts, get out those tax forms, sharpen those pencils, and stab yourself in the aorta. Dave Barry. Now, yoga teachers may be known for a lot of things, but finance is definitely not one of them. Many of us actually are repelled by the notion of balancing a checkbook, let alone bookkeeping and taxes. Listen, I feel much of your pain, and as much as I love my accountant, I do dread going to see her every year because accounting makes my head hurt. So, that said, I've learned a lot over the years and have found that a few basic things have made the whole experience, much easier for me. In fact, once I learned a few things about accounting, I started literally saving thousands of dollars each year on my taxes. And so as much as you might be tempted to skip this lesson, I think you will find it worth your while to consider the following tips. Now, let me also just do a quick release on taxes because, it's let's keep it a little bit, the energy a little bit more open. So closing your eyes, can you simply welcome the thought of taxes and how that makes you feel? Welcome whatever energy that brings up for you. Maybe it's uneasiness, it's an uncomfortable feeling. Can you just simply welcome whatever comes up for you for taxes? Thoughts, energies, beliefs, judgments, maybe pain from past experiences? And can you welcome wanting to do something with those feelings or judgments, beliefs, energies? Wanting to be at peace with them, wanting to let them go, wanting to push them away, wanting just not to even think about it? Can you simply welcome wanting to do anything in this moment other than just be? And can you welcome any sense that taxes are personal, that money is personal, that it means something to do with who you are? Can you simply welcome the power you've been giving money, the power you think it has over you? All the time and energy that you've invested into money, trying to make more of it, trying to get by with less of it, trying to save it. Can you simply welcome all that energy that you've invested into money? Your story with money. Maybe even feelings that you just don't even understand. Feelings that go back to your childhood. How your family felt about money. How mom, dad, or whoever raised you, how they felt about money. Can you welcome your beliefs of what you think money makes you as a person? Maybe there's a belief, an unsaid belief, that if you have more money, you're a better person. Can you simply welcome your story and how that makes you feel with money? And then once again, can you welcome any sense that money is personal? That it means something to do with who you are. That is a reflection of who you are. And just for now, just in this moment, can you simply let that go? And just be you. Open, present, and here. Okay, shall we go back into taxes? So, important reminder, while I hope this lesson is helpful, it is not a substitute for an accountant. Very important. Laws vary from state to state and country to country and change all the time. So please use this lesson as a loose guide only and consult a qualified professional regarding your unique needs. Now, teachers from literally all over the world are attending this training. So obviously, where you're at could be different. Where I'm getting my information is based upon the U.S. Now, there are a lot of similarities in a lot of countries, but there also are a lot of differences. At the end of the day, again, consult a qualified professional regarding your unique needs. So typically the ways of getting paid is number 1, employee, 2, independent contractor, sole proprietorship, and 3, LLC or S Corp. Now, one thing I want, at least for the yoga studio owners, to think about is, what do I feel like is the best way for me to pay my employees? So moving forward, ways of getting paid, number 1, employee. Now this means that your employer, whether it be a yoga studio or gym, will withhold some of the money to cover various taxes, income tax, the federal government, your state, Social Security, disability, Medicare. The benefits of being employees, if you don't like accounting, your employer will do much of that for you. They will deduct the money before you ever see it and send it to the federal government, state governments, and hopefully at the end of the year they will have taken out enough money that you don't owe any additional taxes. In addition, your employer will pay half of your FICA and Medicare, about 7.65 currently. If you were self-employed, you would have to pay this full amount, and instead of your employer matching the percentage you pay. Instead, again, your employer matches the percentage that you pay, not when you are self-employed. Let me read that again. If you were self-employed, you would have to pay this full amount, and instead of your employer matching the percentage you pay, so again, you pay the full amount. So one of the advantages of being an employee. Now, additional benefits in the U.S., your employer is also required to pay your workers' compensation insurance so that if you get injured on the job, you receive money each month. The same thing holds true for unemployment. If you were laid off through no fault of your own, key words, no fault of your own, you can receive unemployment benefits. Drawbacks, and this is a big one, you cannot deduct your business expenses on your income tax. Huge. That's a very, very big one. Now, let me explain quickly why getting money back, this is a slightly off topic, but kind of important a little bit. If you do find yourself as an employee, and this could be a sense like for those that are teaching yoga part-time currently and you have a regular 9-to-5 job. Again, let me explain quickly why getting money back from your taxes is not a good thing. The reason why I say that is because basically what you're doing is you're giving your money a loan, an interest-free loan to the government. And you're saying, okay, I want you to hold on to it for me. And then 1 year later, you give it to me. Now, in that time, basically, you've earned no interest. You gave an interest-free loan to the government. You earned no interest on it. You weren't able to use it in ways that you felt, could help your business, to reinvest in your business. You could have used that to potentially invest in stocks, bonds, investments, whatever it may be. You weren't able to use that money to your advantage. Now, for some people that, they feel like, okay, I really need to have that income tax money so that I can save and put that to the side. Do whatever you feel is right for you. For me, I know that I want my money to be able to access it each and every month. I want to be able to use that money to invest in the ways that I see fit, as opposed to having the government hold on to it for a while. Now, number 2, sole proprietorship. If your employer does not take the necessary taxes out of your paycheck and you receive a 1099 at the end of the year instead of a W-2, you are an independent contractor. Now, I highly recommend, if you are a yoga studio owner, to pay your employees as independent contractors to limit your liability. Now, also, at the same time, it's a benefit. Truly, it's a benefit to your subcontractors, to your yoga teachers, so that they can claim their business expenses. Filing your taxes, again, it's the key benefit here in the sole proprietorship is the ability to write off business taxes, and that's really what the heart of I'm getting at. And we're going to kind of build onto this as we go along. Now, one of the drawbacks of being a sole proprietor is if you don't like saving your receipts and doing bookkeeping, then being a sole proprietor is not to your advantage. However, again, if you're willing to keep track of your business expenses and take responsibility for your own business, then you can come out way ahead. Now, the biggest drawback under a sole proprietorship is your personal assets, your house, car, savings, even child's college fund, etc., are vulnerable. And we'll go into that a little bit more. The number 3, LLC or S Corp. Now, there's many different options available to you. Some people are like, oh my God, corporation, oh my God. No, I get it. This is something different. This is not the Walmart. This is not the Enron. This is something completely different. So let's start with LLC. It is a business structure that combines the pass-through taxation of a partnership or sole proprietorship with the limited liability of a corporation. That means that people cannot come after you personally. Your personal assets are protected. Now, what that means when it says it's a business structure that combines the pass-through taxation, that means that the profit and loss of the business, the actual, whether you owe or to get back, that means that it goes through to your individual tax. When you prepare your taxes, ultimately you personally are responsible for the taxes from the LLC. Now, the S Corp is a special type of corporation created through an IRS tax election. An eligible domestic corporation can avoid double taxation once to the corporation and again to the shareholders by electing to be treated as an S Corp. What that means, and I really do not want to get deep into this because, again, taking the mic out of my back, I am not an accountant. I have seen most, I would say at least 90% of yoga teachers will tend to go with an LLC. I'm going to give you some resources to look into this a little bit further. The one thing I want to say is that with an S Corp, you can pay yourself and avoid the self-employment tax. That is one of the primary benefits of an S Corp. So why should you form a corporation, whether it's an LLC or an S Corp? Because legally speaking, if you've ever cashed a check from a private client or yoga studio, you actually already have a corporation for tax purposes, and it's not a great one. Without a corporation, you are a sole proprietor or partnership if you or one or more others are in business together, say as yoga studio owners. Not only does failure to incorporate out of one of these later entities leave you at risk for devastating losses, like again we talked about your house, your car, your kids' college fund, you also are making things way too complicated for tax purposes. So again, why should you form a corporation? So speaking of which, you're not getting all the tax deductions you're eligible for because without a corporate entity, you don't have a business bank account. By forming a corporate entity and letting clients and studios pay for your corporate entity rather than written straight to your name, you're protecting your personal assets from any losses you incur as a yoga teacher or studio owner. For example, in layman terms, if your studio goes under and still owes the bank money, the bank can't touch your personal assets if you have the right corporate entity in place. Again, very important. So which one is best for me? Well, this is an excellent online quiz that will help you determine what this is the best choice for you, this link right here. You can also check out this link for a really good breakdown of the differences between an LLC and S-Corp, this link as well. Basically, it's the same site, really does an excellent job of breaking down what is best for you. The quiz is really easy to do, self-explanatory. Again, just a really excellent resource for figuring out what is the best option for you. So, worried about an IRS audit? Avoid what's called a red flag. That's something the IRS looks for. For example, you say you have money left in your bank account after paying taxes. That's a red flag. I told you I needed some jokes in here to keep it light. So going into quarterly taxes now, if you're self-employed, you are expected to send the federal government a check for your estimated taxes every 3 months. This may seem a bit unfair because employees do not do this, but in truth they do. Their employer is the one that's doing it. So if you overpay, you get a check back at the end of the year after you file your taxes. If you underpay, you will not only owe the money, but you will also most likely get hit with a fine for not prepaying enough. Unless the figures are way off, the IRS will usually let it slide if you're paying based on the previous year's taxes. If, however, you start making a lot more, you will need to account for the increased income or the IRS will fine you. In the U.S., quarterly taxes are currently due on the 15th of April, June, September, and January. In addition, most states require self-employed individuals to pay quarterly taxes. Again, your accountant can advise you on the laws in your area. So the 30% rule. There's no way to know how much you will owe in taxes each year until you sit down and focus on the books. If you are good at bookkeeping, you will be able to estimate that as you go along. As you file from year to year, you will have a much better idea of how much to pay each quarter. But until then, you should plan to put at least 30% of your total income aside to make sure that at the end of each quarter, you are not caught short. Again, this is a general rule, so please discuss this with a certified public accountant. The hardest thing in the world to understand is the income tax by Albert Einstein. There you go, seriously. Accountants, angels from God. To make money, you should never be afraid to invest, and the best investment you can make is in a good accountant. If you're tired of paying the IRS each year or you feel that there is money being left on the table, let your frugal nature step aside and let the accountants do their magic. Now, example, the first time I hired an accountant, the cost was nearly $500. She saved me an additional $6,000 plus that year alone that I hadn't accounted for. This trend has continued year after year. Not once has she failed to save me $1,000, and it's worth every penny I pay her for. Think about it. If you paid someone $500 and you got back an additional $1,000, were they worth it? Yes. Yes, absolutely. You got double your money back. So just think about it in terms of an investment and being smart about your business. Again, this is all about being smart about your business. protecting it, and keeping more of the money that you're making. So tips for working with an accountant. Always find a certified public accountant. Your best friend may be cheaper, but is typically not properly trained in many details of tax law. Get organized. I cannot emphasize this enough. If you come with a shoebox full of receipts, your accountant is going to charge you more and likely miss some of the valuable deductions and business expenses. Get that together, and we're going to go into this a little bit more. Choose the right accountant. Like most professionals, accountants specialize. They're specialized professionals. Accountants specialize, some in corporate accounting, others in small business, others in sole proprietorship. So depending upon your needs as well as the needs of your spouse, if you have one, you will want to consider the types of clients with which your accountant is most skilled. So accounting and bookkeeping software. The best thing you can do to support your accountant is to get accounting software for your Mac or PC. So this will reduce the amount you pay the accountant in tax preparation fees. Also, you'll feel a lot more together and on top of your business. Quicken is the most popular software, but there are others as well, and all of them roughly do the same thing. Quicken just has good reviews. You simply set up accounts such as checking, savings, credit card, and cash, and then you log all the activity within each account. I know this seems daunting, but it's actually quite easy. Start by making a list of all the accounts you have with various banks. Most banks will allow you to download your transactions to make data entry easier. Now, once the transactions are downloaded into the various accounts, you can assign each transaction a category and subcategory. When it comes time to do your taxes, you simply press a button and print out a report to hand your accountant. Seriously, let's make this as easy as possible for them, because it's going to make things easier for you. It's also a good idea to have them, have a digital copy as well. Getting set up is probably the hardest part. If you're feeling overwhelmed, you can always hire a bookkeeper to do the initial setup and show you how to work the software. So personal finance versus bookkeeping software. Quicken, Microsoft Money, iBank. I've used Mint.com. I did that in the beginning. And other personal finance will likely be all you need, again, at least in the beginning. However, should your business grow, which we all plan on your business growing, you might want to consider booking software such as QuickBooks or MYOB Account Edge. The main difference between the two is that bookkeeping software allows you to keep track of things like payroll, retail inventory, and client accounts. Again, it is highly unlikely that you will need such advanced software initially, but your accountant and/or your bookkeeper can advise you on this. So, important tip. Before you buy accounting software of any kind, be sure to contact your bank and make sure the software you want to buy is compatible with your accounts. Important. And while you're on the phone with them, find out how to download those transactions and how much they charge for that service. Usually it can be between $5 to $10 per month, but again, every bank is different. So let's talk about business expenses. Let's start getting into saving that money. It would be impossible, again, for me to list all of the business expenses you can and cannot write off. So important. My personal policy is to keep track of every penny I spend, and then let my accountant decide what it is an expense and what isn't. It's also important to note that not all expenses are not dollar for dollar. Like, for example, a business meal is only a percentage of the bill. So that said, here's a sample list of what you may be able to write off. Your unique circumstances will certainly add additional, write-offs. Likewise, not all of these may apply to you. Like a computer, if you purchase a computer. Cell phone, if you purchase a cell phone, or your monthly bill. Yoga books, yoga music, yoga props, continuing education, workshops, retreats, Yoga Alliance. And this very training is tax deductible if you are either a sole proprietor, independent contractor, an LLC, or an S Corp. Again, this training can and should be able to be written off. So professional insurance, automotive expenses, your mileage or your repairs, travel expenses, teaching supplies, stationery, postage, accountant and bank fees, internet and website, business and travel meals, charitable donations, and your health insurance. Yes, your health insurance, at least here in the U.S. So on my income tax 1040, it says check this box if you are blind. I wanted to put a check mark about 3 inches away. Okay, again, I realize this is probably not the most exciting lesson for you. But again, let's get in this mindset. We are creating something now and something for the future. This is our business. This is our career. We need to put the right things in place to ensure that we protect ourselves, that we protect our investment. And if you feel a little bit, maybe intimidated or overwhelmed by any of this, first off, it's okay. It's okay. Honor that feeling of like, oh my God, I got to do an S Corp and LLC. It's okay. Breathe easy. First off, I want to tell you that at least here in the state of Colorado where I live, it's $50 to register an S Corp or an LLC. And there's many sites that will walk you through how to do that. So it's not incredibly expensive. Again, I don't know how that is in other countries. But the biggest thing here again is we want to set something up for the future. And we want to protect you. We want to protect your personal assets. God forbid anything should ever happen. But we just want to make sure that you're protected. And then again, keep more of the money that you're making. All right. I love you all. I hope you enjoyed this lesson and talk to you soon.